Hello and welcome to Pro Trader Strategies Market Commentary. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data out today other than the EIA oil inventories, which came in at 917,000 barrel drawdown, but it was expected to be a $1.5 million barrel drawdown. So a lot less of a drawdown than what was expected. So with the summer season going on, people starting to travel for their summer vacations, a lot of driving was expected there, and using a lot of the oil that is out there. One thing also to note is that oil refineries utilization upticked to 1.1%, was only expected to uptick by about 0.5%. So refineries are starting to really crank out the distilling process. The other thing is that gasoline inventories was a build of 627,000 versus expected a drawdown of 1 million gallons. So a bigger build in gasoline, probably due in part to the refineries cranking it out and the lack of demand there. So crude oil really suffering from that, and as you can see is down 60 cents right now. Was testing the $50 barrel that we've talked about so many times, and it just can't get out of its own way and stay above there for very long. So the overall market is coming off from that. We are seeing a bit of disconnect despite the fact that crude oil is down. Like I've said in the past several days, we're really seeing this separation from crude oil and the overall equities. And right now, the overall equity market is really trying to figure out what's going to happen with this Brexit. Right now, I think the last numbers I've seen were like 45% are in favor of the British exit from the EU, and 44% of Britons are in favor of staying in the EU. So it's a really split decision there. So the final decision comes down tomorrow, and we'll have to see how that affects the overall market. You could see really currencies get a little wanky. The banks could go a little bit crazy on that too. So a couple of those things are the things that I'm actually staying away from. On to the NASDAQ, like I said, /NQ, up 6.5 points on the day, but well off the highs. It's really started slumping, especially after that crude oil inventory number came out and crude oil came off. It's still reflecting a positive here in the E-mini S&Ps, but just treading above water and right there at the value area. E-mini S&Ps up almost 2 points right now. If we look at the breakdown here on the E-mini S&Ps, as you can tell, we were pushing higher overnight and through the early hours of the opening trade. But as soon as those crude oil inventories came out, you can see here we just started really selling off. E-mini S&Ps up 1.5 to 2 ticks right now. On to a couple trades that I've done in potash. Potash actually has pretty high implied volatility right now. It's above 50, despite the fact that there's nothing really going on in there. And it's right at that value area that I talk a lot about. And as you can see here, this is where the most time and volume has been spent. So with a high implied volatility, it's right there at the value area. I could easily see it kind of wanting to get into a comfort zone and trade sideways from here. So I looked at it as doing the July 17 straddle, and I collected $1.26 for that. So hopefully we can stay within that range and settle right there at around 17 is what I'm looking for potash, ticker symbol POT. And then on to HON. Honeywell international, ticker symbol HON. I've talked about this in several of these quick videos I've been doing on picking tops and things of that nature, and it's really gotten extended well over the value area high here. It has gotten comfortable up in this area, but we did have this like shooting, it's not really a shooting star anymore, but it really gapped up, and the bears came into that market to take some profits. And the overall market looks like it's going to want to kind of settle on the lows of the day. For me, anyway, it looks like that. So I decided to go in there. It's got really low implied volatility, so you can see there. And I decided to go in and buy some puts in there. So I did the July 115 puts, and I paid $1.31 for that. The reason why I went into the July, I'm going to be fighting theta decay, but I didn't want to really get messed around with the earnings that comes out in the August cycle. So I decided to go into the July, and hopefully we can at least get a quick move down to that volume node right here. And in that case, I would be in the money with those puts, which would be good. So looking for it to come down and hopefully get to that volume node there, and then I'll look to cover those. Then Tesla, everybody's talking about Tesla right now. Elon Musk is talking about trying to take Solar City private and be under Tesla's corporate structure. I don't know that that's a good idea. There's a lot of things that people are talking about that it could hurt Tesla quite badly, because Solar City really just doesn't make any money. And while Tesla is looking really good and a stock everybody loves, millionaires love the cars there, but at the end of the day, I just felt like with this big sell-off we've seen in Tesla, down almost 10% in one day, I decided to take a contrarian point on this, and went into the August and bought the 220 calls and paid $7.60 for that. So it's a bit of a steep buy for that, but hopefully we can at least get a rally back up to the value area off this news here. So down 10%, I figured that might be a good time to just step into the water. I'm going to have a really tight leash on this one though, so I'm not completely sold on it, so we'll have to see how that goes going forward. The other thing I'm trying to do right now is cover my GLD position. I just, with this Brexit thing coming out tomorrow, GLD could really rally, and I'm short gold. So I'm looking to try and cover that, but it's kind of gotten away from me at this point. And then I'm going to be also looking at BBBY, which is Bed Bath and Beyond. BBBY is the ticker symbol there. They have earnings coming out, so I'm going to be looking at doing something like that. So follow me on Twitter. You can find that one out there, because I usually tweet that out late in the day when I'm putting that trade on, because I like to do that in the last hour or so to the end of the day, so I can get a clean number on that one. And Friday, in 2 days, Friday, we're going to be doing a webinar on poor man's covered calls. So if you would like to emulate having a portfolio of long stocks, this is a cheaper way to do it, less margin. You don't have to lose all that buying power, and you're not beholden to that stock going forward. So we're going to be synthetically getting long that for a lot less margin, and then we're going to be selling some calls against that position in order to lower our overall cost basis on that, which should hopefully increase our overall profit. All right, that's about all I got for you guys today, other than if you can't take that, take it easy.